what does the London session do between 2 o'clock and 5 o'clock in the morning? What's the market do? It drops. This here is a Judas swing. The idea of focusing on a bias that is bullish. So because of that, in my mind, I want to see what price does between midnight going down into 2 o'clock. Below that low is going to be what? Sell stops. Someone's going long there. So if we're bullish and we see that they did in fact take out traders that had stops below here at a time of day when it creates the high or low of the day, not all the time, most of the time. Now, because it does that very thing here, right at 3:30, and that's the low of the day. When it creates that low, we want to see some kind of displacement to the upside. Because if it does do that, that's indicating the algorithm is flashing like a billboard sign. It's going to go up now. So focus on seeking a premium price. So what is a premium price? It's going to be a short-term high and or a fair value gap above market price. Between this low here to this candle here, those are the range extremes that you're annotating. So down here when it hit the stops, first thing in my mind is, okay, how do we trade after that? And it should go into this gap here. Does it do that? Absolutely it does. Then it creates what? Another gap here. While I'm looking at price action in response to this area here, I'm also now measuring the willingness to see price find more support in this fair value gap. So it goes down here to take the stops on a day when we're bullish. Does the market immediately react by going higher after it goes below that low? Yes, it does. You see where the close of this candle is here? That tells me that this was a stop rate. How do you know it's going to not go through that low and keep on going? I don't know in the first candle. I want to wait and see when it closes. It closes here. Then I want to see the next candle. What does it do? Does a little movement below that, but then the body stops there. That's a swing low. At a time when I'm bullish, at a time of the day when it creates the low of the day, if I'm bullish, it's knocked out traders that are long that had sell stops below that. So we crossed all boxes off that this is a high probability reversal in a day that's likely to go higher. So that right there is my first indication that that's a very high probability reversal point. You wait for the next candle. Does it create a swing low? Yeah. Price shows you this displacement to the upside. And then you wait patiently for it to trade right back down into this candlestick's movement higher. The market will want to offer down close or down expansion candles, which is sell side delivery. It really means simply this. The market moved up right here, one candle. So it first started off real quick right here. So it wants to come right back down. And what that does is it affords smart money to now enter, to get long, accumulate long positions. Where would they buy? If you look at the high to the low, here's the midpoint of that big up close candle. We went past it, yes. But look at where the bodies are closing. Are they closing at or below that candlestick's high? No. Did we trade to that candle and through it? Yes. So the fact that these candles are closing above the high of that candle, which makes this a buy side imbalance, sell side inefficiency fair value gap, trading down to that inefficiency, and these candles bodies not closing at or below tells me that we're really going to move higher and attack at the very minimum these relative equal highs.